Welcome to Trading Lounge and the US Indices for Friday, April the 22nd. We'll look at the bullish count and the bearish count, but obviously the bearish count has got the most weight to it. And the reason I say that for is not because of the sharp move down, it's because when we look at some of the stocks like Amazon that I mentioned were leading the pack to the downside, not necessarily so, but certainly out there in front with the other guys, that it sort of made new lows in a sense. So it certainly puts that weight to that point. And this is my point here with Amazon. You see how it's come through this low here? So that kind of, cements it in for the rest of the market. So even though this move down here in the S&P hasn't come down through this low here, it's still possible to keep this as 1 and 2 and 1 and 2. And then this move up here would also be 1 and 2 as well. We can take a look at that on the intraday, but would need to see that push straight up from that point. And it has moved down past its, 61.8%. But we will look at it anyway. I think we've got to give them, a fair shake. On the bearish side, we've got sort of two counts that we need to start taking a little bit more sort of interest in. One of them is we've got the A wave here with an ABC here for the B wave, and then we've got 1 and 2, and then we'll have go down for wave 3 here quite strongly in all of this. And this first move down here would just, if I can just remove that now, that doesn't need to be there. So in fact, this is wave 1 here and 2 here, so we'd have wave 3 come down. And so that move here, that first move down, is just wave 1 of wave 3, and then 4 and 5. Now that could be the go. So basically from B to C, having 5 waves down here. Or we will need to look at it, if I just go to another chart, look at it slightly differently, where we have this first move down here as an A wave, a B wave, and a C wave here, probably of equal length here as an ABC, and then we have this as an A wave here, a B wave here, and then this down here as well. That's not quite true either, so we'll have to just excuse my sort of ignorance. So that would give us an ABC to that point, an ABC back to here, and then an A and a B and a C wave here. So a bit of a few dog legs in this, if you will, something like that. So we need to track sort of both of these. We don't need to worry about it today, but just filling you in a little bit here, because if you think we're coming down for 1 and 2 and then long third wave coming down, and a fourth and fifth, all pretty easy peasy in that way. But if we get this X wave in here, it's going to crucify us, or at least torture us in that way. So we need to have a strategy for that, So so this is our target area here for this, down around the 3.8. But who knows? Obviously there's this big number here for all of that as well, or we could come down further. So we just need to just keep a track of things as we go. But yeah, certainly if you've got any stocks on the long side, they need to be hedged at this point. Okay, so let's go in and have a closer look. I'm not sure we started with all of this. Let me just check. I can't remember what. Got so many little intraday charts going on. This is one of them on the 5,000 tick. So in this case, yesterday we were talking about 1, 2, 3, 4, 5 down here, then the A, and then the B, and then the C, and this is sort of developed from the stocks, On this chart at least, we looked at shorting in here, and then shorting below here. We're looking for that one more move up there yesterday, so that was okay. So we need to discuss this here, because basically I think this is 5 waves here, so that means we can have a move back. So what we need to do is, I won't go into it just yet on this, we'll just keep cruising in. I just want to see what I've done on other charts, but there'll be some, let's just get some sort of shape on this at least anyway. But I do want to go, I haven't had time to go in and actually check this, so that's something that we will do. Doesn't have to come back this far, but it could. So what we're doing in stocks is we were taking the percentage here and then finding our way back in here again, so we can just kind of get that sort of happening again in here. So it's just really taking a balanced view on how we can move through this particular pattern with a reasonable amount of safety, in a sense. So that would be there, and we can look at just sort of considering, might be longer than that, I don't know, but what we need to work out here, 4, 5. See, what we need to consider is that other pattern that I mentioned, which I do need to bring in now for this. So an A wave here, a B wave here, and 5 waves down for wave C here. Now we've either got wave C or we've got wave C or wave 3 at this point. So I can plonk that out of the way, move that out of the way. And that would give us at that point, if it's a wave C there, then we've got that W there, and then we'll have that X over here, which is going to be the stinger, WXY. So, like I said, we don't have to worry about it today, but when we get down to 1, 2, 3, 4, 5 here, this is where we're going to need to be a bit thoughtful. I haven't thought it out just yet, but obviously in one way or another, we need to take our money off the table, and because we'll either come back for a wave 4, which can come back to the level of this wave 4, which we either come back 40% or we come back 50, 60%. That's the difference, you know. So we'll just need to be over that a little bit. Always get a bounce off 3. Okay, so when this comes down here, you can expect the bounce off that. Depending where it goes with this as well, we might end up being right on that crossroads there, you know. Who knows? We'll see. I'll put it over there a little bit. It probably will be. And that wave 4 will come back and hit this supply at that point. It might come down further. It's still quite a long way down here, isn't it? I mean, the way to get wave 3, of course, is take the length of that and then drop that down onto the 61.8%, and then we'll get wave 3 at the 161 here. But I know what the number 3 here does, so could be anywhere in that space, but we'll definitely get a bounce. We'll probably end up maybe anyway. We'll see. Don't want to waffle on too much. Yeah, so that's it at this point. It's definitely going to be support here, and that's what we're getting at the moment, Okay, so that's on that 5 tick. Then it's on 2 tick. Sorry to go through this. I should have this organized. Okay, so this was another way of looking at the situation. And it's using this in here for that, but that's okay. It doesn't really matter. We don't need to go into this at all at this point. We kind of know where we are on that, but I just want to tick on the one. I think the 1,000 was where we had the bullish count, wasn't it? So that could be interesting. So we had wave 2 down here and looking at wave 1 to the upside. So like I said, I mean, this is where it should have pulled back to here. It's okay to pull back further, the 62%, 61.8%, and then the 78.6, which is down a bit further. So that's okay. It's not a big deal. We could put that there. But But like I said, the reason I don't think this is the case is because Amazon has taken out the low down here. And also that appears to be 5 waves. I don't see a nice 3-wave price action in there. Still, we'll just sort of entertain it on the sidelines for a little bit, but I want to go in and have a look at this. I don't think I've been working on the 100 tick chart for this. No, I haven't. So I might just go to the 20. Just, it won't be perfect, but we'll get some sort of idea with this. So that's 1, 2, 3, 4, 5. That looks like the 3rd wave. So that's got to be wave 1 and 2 here. So let's just label that in. I might be wrong. And then this is going to be 1, 2, 3, 4, and 5. Still might get another little low there because that's 1 and 2, I think, and then that's 1, 2, 3, 4, 5. So basically that would be all of the 3rd wave here. So we still need this 1 and 2 in here, which will be this 3, 4 here. So we could come down further with this, but at the same time it's tricky because the psychology of the market will want to pull back to that 400. It won't want to let go. And then we've got group 2 here. So 65 subgroup 2, so that's going to offer some support at that point. So it could come down, could drift down here, because if the Asian market's going to be sort of, I mean, all the indices around the world, all the futures markets will be following this, but when the stock market opens, New Zealand, Australia, Japan, Hong Kong, the stocks are going to be smashed and they're going to pull them down further. So still, it looks like a nice little impulse wave off the low there, but haven't made a new low here, so we can still, yeah, I'm not quite sure. But anyway, we can just work with this in a rough way. So we can look at this being, I'm going to take it down to the 8 because it could drift down further. So we're looking for this move back up here. That's where it can move to. This really here is the block here, this one here, so I think it's more likely to come to that point. So this structure here coming back up here from 1 to 2 here, well, first of all, we don't have 3 waves down here, so we don't have a bullish situation. So we're going to get something 330, the top of group 1. I'm thinking of group 1 over there, and 2, 3. We can get something like this, I reckon, which leaves us, we can draw a line through here, or we can draw a line through here, all of that, or because we've got 5 waves here, we can just color these boxes in, you know. So this is the 400. That's group 2 below, and then we need to put in group 1 above, basically. So 10, 20, and 30, and the next one is 50. So it's got to get support on. So shorting it at the 50 would be fantastic. It'll struggle to get support on here. That will give this B wave here, the little ABC here, and this little structure here. It's worth understanding to get it right. So it will be, it's called a zigzag, as you know, and that will be 5 waves in here and 3 waves and 5 waves. I mean, I've drawn a really nice, simple, easy sort of picture, so what could go wrong, you know? So, but yeah, you know, it's it'll look like somebody was drunk, either the markets or myself. But yeah, we've got to expect some sort of rally. And so I think that all in all, if you've been short in this, taking some money off the table here for this would be would make sense. And then moving back, I mean, you could take it all, but I think it's good practice to find a balance on what you're comfortable with. I mean, because we've got 5 waves here, we should be going down further. Now, where I could make a mistake in talking about this, I've got you thinking, well, we're all going up here now, you know. But we also need to be mindful. That's why you need to leave some skin in the game, because this could be 1 here, and coming back for 2, 3, 4, and 5 here. So we get that 5th wave that comes down to here now. So wave 1 is sitting here, and we just come back into this space for a wave 2 here, something like this, and then we go down again like that. Do you know what I mean? And then you kind of think, while you're thinking up here, I've led you to believe that we're going up here, and I've led you astray, and we get something like this, you know. So you've got to kind of think about it, you know. You got to, I don't know, it just takes, you just got to kind of see it when it's, you know, when it's there. I don't know how else to sort of put it. I don't think that's going to be a long wave down here, because this wave 1 here is short, and that will leave this 1, 2, 3, 4, 5 here, the extensions in wave 3. So yeah, so that could be the low, and we could move up from there, or we could have a longer move down here, or we could have a little shorter move down here. There's a few things that can occur, but yeah, just generally to see that we get some sort of correction. And you know, the market is working with this number. That's number one thing that you've got to realize. And then you've got group 1 above and group 2 below. So group 1 is going to try to pin the market back to the 400, and the support, this group 2 here will try to, you know, to pin it, push it back up into that, you know. Once this group here becomes the resistance, you need to be looking to add to the position at that point down here for this, you know. Once that's retested there, I normally use the 72 and the 65 if I'm intraday trading, so to speak. But yeah, there's a lot that can go on. But yeah, so it's just this general cloud of possibilities here for that. So anyway, food for thought. And yeah, so what I'm just going to do now is just go back to my 5,000 tick, just so we can just look at this again here. And I just want to put in here 2K and 20 tick there. That's kind of really what we're working with at the moment on this. So just so I know, just saves me a lot of time, you know, writing stuff on bits of paper on my desk and things. So yeah, look, that's where we are in a bit of a nutshell. So we're looking at, if you're up for it, take a bit of profit at this point and then feed that back in here. It may not come all the way back up there, so just be careful about that. And this is the number that we're working with, the 400. So like this little ABC rally here, for example, that's kind of a fingerprint of this market. So, you know, looking for that second low here. You can do other things over here, of course, but... And I think sort of dollar cost averaging is really quite good too, you know. If you think that you've got it up here, you don't have to shovel it all in at once. You know, you can start thinking about the price here. So every 10 points, for example, you could put in a short position, but you don't need to put it in at 10 and 20 to start with. You can get that on the way down. But certainly 30, 40 and 50, you know. And that's if you've taken money off the table here. How much you should take off here is really up to yourself. I mean, the once you start to see that route, you might take off, say, 20% here. And then as you see it rally, it finds support on top of the 400 here. So you can see a nice little classic trading levels pattern sitting in here. You think, oh, okay, well, this is going to go up. So I might take another 30% off. That takes me 50% or maybe even more. And then use that 50% to build back in over this side over here. So you can just do it. I think it's always good to work in stages with things. Okay, I've waffled long, so we need to cruise along. This is just the SPY here, so basically the same sort of thing here. But this pattern here of 1, 2, 3, 4, 5 here and ABC here is really what we're looking at with Amazon and stock. So on the 12th and 13th here, this is where that really started from. The triple Q, same thing again as well. We won't really go into that at the moment. We'll just I'm not sure why that's up there. I don't know what it's talking about there, but if you got short there, good on you. But otherwise, that's that. But let's just work with the NASDAQ. So here's the bigger picture here as well. So really, the thing is that this trend here is one side of the market, and then we've had this rally back to the 50-60%, you know. So in a way, we're looking for some sort of equality with this, you know. Now, it may not be exact in terms of equality, and this trend might only be 60%, 61.8% of the length of this trend. Those sort of things can come into play. It just depends on, you know, what's happening in the world at the moment, you know, in terms of sentiment and so on. You know, it could go down further with all of that, you know. So we need to look at this in a slightly different way here now. I've got that as cycle degree here, but I think we actually really need to lift it up to super cycle degree. You know, it's something else I just need to do later, but it doesn't matter at this point. But the other thing will be interesting to see the speed of this as well. Like that's the speed here, roughly. Just remove that a bit. We'll talk about that more later. And it'll be interesting to see the speed of this here, because we kind of want, if it's going to be a C wave, we kind of want it to be a bit more lazier. So even a bit more. If this drops really quick here, then we, you know, it's like a third wave kind of thing. Well, then we've got a bit of another issue to look at. We'll probably looking at a bigger move down at that point. But yeah, yes, but no, but. Okay, so I think we'll just go to the 2K here by the looks of it. That's where we've been working. Okay, getting some more. Let's we'll need those. Just want to have a look at the SPY again here just for a second. It's way at the bottom here somewhere. Right. That's going to give that as a 1 and 2 then, isn't it? I'm just wondering which top that I should use here, you know, but it looks like I thought it would have been this one. That would be in line with everything else, but we're going to have, I'll have to think about that a bit. I mean, with the SPY here, it's pretty clean as this one. Do you know what I mean? Which would make it platforms resetting, which would make it this one, but then I'll have to organize all that differently as well. Anyway, while the platform's doing its thing, okay, we're back on track. So we can look at this as 5 waves as well now, so that's all good, and we're looking for some sort of rally. So we could probably get a retest of the 14,000, which would give us another short trade opportunity. Unfortunately, at this point, we have to leave the stop out of the way. But that's okay, because that means you just take a bigger chunk off here, you know. I don't know if on the smaller degrees of things, 100 ticks and all that, that we looked at getting in earlier with this in some sort of move down here, but we'll check on that tomorrow. But anyway, the stop's got to stay out of the way. You've got to work out how much you're going to take off the low here. If that starts climbing, if you get this 800 is really important, and we're sinking into group 2 here. So group 2 will be 13,650. That will be in there, so it's sitting at the lower end of that, close enough. And then there's the 13,720 in here for that. That's the other side of that. If the 800 becomes the support, then you can kind of start to look at it to go to 900 at least, and try to figure out how to short it in there as well. Anyway, we'll see. Can this be bullish? No, just taking out that low here, you know, where the S&P hasn't taken out that low, you know, but some of the tech stocks have. Okay, so yeah, look, we're just looking for, looks like the low's in place there, and wave 2 here. And we're looking at an ABC correction. The A wave, the B wave, and the C wave here. So I think we could also, it just depends on what you can, the B wave can be quite useful if it hasn't pulled back too far. The less it pulls back, the higher this will go, you know. If you can see 5 waves up here, then you could also just draw a line up through here as well, you know, on wave 2 here and wave 4 here, and look to short it. So I'll leave that for you. It's all sort of food for thought there. And put this back in there and then move that out. And then we're with the Russell here. This is just the ETF, but it was pretty clear that we had this situation here for this, you know. But anyway, I want to go to this one here. So this Russell. So we've got 1, 2, 3, 4, 5 here for the A wave, and then an A, B, C here for the B wave. So we should be looking at the same sort of thing here, really. So if we go here down to here somewhere roughly, and kind of expect the same thing over here. So, you know, down into here, there's 2 important levels down here. One is the 15, and the other one is another medium level here is 1650. Another story, I won't go into that at the moment with the trading level stuff. Yeah, so we're going to get sort of 5 waves at least from here down to the 15 here. I would imagine that's going to be the 4th one there, and then down for the 5th. It'll be something like that. So we've only got wave 1 here, 2, 3, 4, 5. We haven't got wave 1 yet and 2 yet. You can see the situation here. So, you know, we've done good, really, you know. I mean, we need to be short in here. We also need to take consideration that when we do come down to number 8 here, then we're going to get a bounce back 50 or 60% at that point. That's what I reckon. So it's good just to put the shell of the idea here. Yeah, so that brings us back to that point. So we need to consider this. It'll be something like that. I mean, it'll look way out when it actually happens, but that's kind of what we're working with. So we really want to sort of, in this case, like really capitalize on this 3rd wave coming down now, you know, and then sort of at 18 we'll get a bounce. The 19 is going to be a problem area too, actually, because of the old lows there. It's an important number. It's just not as important as 18. That's going to be that 3, 4. So we're going to be looking at 5 waves here. We've got 1, and we've got to get 2, and then we'll have 3, 4, 5 for the 3rd wave, and the 4th and the 5th, you know. It's going to be over here a little bit further. Anyway, you kind of see the picture a little bit. Where were we working on this? Well, just got to go in and have a look. Can't remember. Right, okay, that's the 5. So we can just update that a little bit. So 1 and 2 in here. I'm just trying to find out where we may have had a trade thing in here. What was it, 2 and 1 or something, was it? Nothing at 2. We've got a 1. Okay, we've got 1 there. That's, and we know all that. Must be the 100. Yeah, I thought we had at least something in here. Okay, that's right. Yeah, that's it. So let's just get in a little bit more here, just to get the picture happening. So we were going up here, and we're talking about up here. Surprising I didn't make that box green. Anyway, we've got half a trade here, and we've got something down here. You might have an improvement on that, hopefully. We know that this is roughly 5 waves down. It could have another little move down, I'm not sure. The thing here, though, the 62, the thing up here, 50-60% here, we may or may not reach it. And the reason for that is because this is such a big number. When markets get into fear like this here, they need their mummy to cuddle, you know. So and that's it there. So I don't know if we're going to get up there, but it would be nice to short it at that point, you know. So we'll just put, well, first of all, let's just put that percentage in here. Let's just consider that for a moment. And then I think what we could do is we could once it's matured a little bit, get some there. So that's one position. So definitely get some there. Copy that. We're definitely going to get some at the 20 as well. Now, when I say 20, if you can get it at the 18, that's good enough at the 20, because we may not get to the 20. Okay, so 18, the little 8 in there is where 8 is a profit-taking number. So the bids are going to be hit at that point. It may go to the 20, but at least you'll be sort of there. And also too, that B wave low, wherever that come in, you might get lucky with that. And we need to sort of tuck in closer to the 200 area through here. And then also once it comes through here in group 2 here, you got to kind of think that the next step on that would be that we need to look for wave 1. Now wave 1 may be here, or it may be here. And then wave 2 is going to come back and retest that 2000 there. So we're going to come back up here in one way or another, and we're going to retest that situation and then move down. So you might want to also consider going short again here, and you definitely want to be short under here. And I don't know, I mean, you know, you could just be trading one contract, I mean, you know, and build in a lot as you go, you know. So so in the meantime, in terms of stops, we have to be above that. So that means that we can put it break even on this one. We're just going to color that in red. So we need to, I mean, you'll need to do a lot of this yourself. So I don't know how much you want to take off here. I don't expect, you know, because all of this is here. Let me just have a look over here. Oh, there's not a lot stopping it. You see how that went fast here? That went reasonably clear. That's clear. There's nothing sort of, there's no big consolidate. The big consolidation is here for that. So on these ones here, try to get them on the way down rather than on the way up. But yeah, see how you go. And if you don't trade any other markets and you only trade this, but definitely have a look at some of the stocks like Amazon and things that are creating this market, you know. These, yeah, anyway, have a look around the block even though you don't trade, because sometimes you see a little thing or two and you go, oh, right, okay, well, that's interesting, you know, and then you can use that. Okay, so I've waffled on too much, but yeah, I think that I needed to, because we really need to get in on, we're on the third of the third of the third coming down here, you know. This is where we need to, you know, be brave and be sensible and not stupid. Alrighty, cheers.